Wake up, motherfucker.
Yo, what's up? It's a very early morning edition. If you haven't seen my last presentation, please go see that video. Link is in the description. I did one show around, I guess, 3 p.m. Eastern. Okay. Yo, what's up, King? Now, this is important. We have to do stock stuff. All right. I titled my show 2 Gamma Shabbat. So, if you know statistics, you know, a 2 gamma event. 2 sigma. My bad. Sigma. I used the wrong Greek letter there. Sigma. We might have something interesting coming up. I don't know. Maybe it'll happen tomorrow. Maybe it'll be on Monday. But we have some Hindenburg omen alerts. So a few of them have triggered. Not as much as like October last year. And after these signals have triggered in October, we had a bit of a crash, but nothing significant. We didn't penetrate that 18, 40. I guess it's 40. I don't know. Some moving average here. I guess this is the 90 moving average I put on here. Yeah, we didn't penetrate that 90. Okay. Okay, let me read this article first. Let's get this out of the bag. Yeah, what's up, Solid Snake? Okay, Hindenburgs are back. So we got 3 signals so far. We had 5 in October. I guess it was 5. It looked like a lot more than that, but all right, I'll believe you. 5. 3. The NYSE's daily 80 line, that means advanced decline line, has just made a new all-time high on February 4th, 2026. All right, which is a statement that liquidity is plentiful. But just a day later, we have gotten the 3rd Hindenburg omen within 6 trading days. This is a message that for all of that supposedly plentiful liquidity, the market has some serious problems. The late Jim Mieka created the Hindenburg omen signal back in 1995. He intended it as an improvement on the late Gerald Appel's split market sell signal. I guess it's Gerald Appel. I think that's how you pronounce his last name. He made the MACD, I believe. Anyway, which occurred any day that saw both new highs and new lows on the NYSE, New York Stock Exchange, exceed 45 issues. Mieka saw that the problem of not adjusting that for the increased number of issues traded, and he wanted to add some other filtering rules to get better signals. An important one is that the market has to be in an uptrend to give a signal. Mieka thought it was not very useful to get such a warning once stock prices are already in a downtrend. The criteria for an Hindenburg omen signal are listed in sorry, I found that out. Let me continue again. Okay. Okay, let me get back. I guess I was on this paragraph, right? I don't know what it is. All right, let me just read this paragraph again. If you do an internet search, you will likely find other sets of criteria at some technical analyst websites. Which is unfortunate. And because Mieka has passed away, we cannot get him to correct the record, so that task is left to others. The criteria I use are those which Mieka personally told Greg Morris, who recorded them in his 2006 book, The Complete Guide to Market Breadth Indicators. The basic idea for the Hindenburg-Omen signal is that during a normal uptrend, there should be more stocks making new highs than making new lows. That is the normal condition. If you get a condition where the uptrend is still underway, but the numbers of new are perking up, then that is a sign of trouble, which constitutes perking up. I mean, what constitutes perking up? That's a matter for opinion and perhaps backtesting, but Mieka set his threshold at both new highs and new lows being greater than 2.8% of advances plus declines on the same day. Other analysts might choose a different criterion, which people are perfectly allowed to do. But for the sake of consistency and so as to avoid confusion, I stick with Mieka's criteria. A single signal is interesting, but the message gets more compelling when we see clusters of multiple signals in a short time frame. We had a grouping of 5 signals from October 29th to November 13th in 2025, but the market shrugged. Now we have 3 more so far, and would have had a 4th on February 4th, 2026, except that the NYSE's McClellan AD oscillator was just barely positive that day. Okay. So, yeah, we're getting some more here. We're getting some more. All right, good. Let's see. All right. I have found that using a 6-month look-back period to count cumulative Hindenburg Omen signals is useful. On that basis, we are now up to 8 signals, which is a pretty high reading. Some noteworthy market tops have come from big readings like this, but we must also note that there have been other times when we got a bunch of Hindenburg Omen signals and nothing much happened. That is possible. A Hindenburg Omen signal, or a bunch of them, is a warning, but not a guarantee of trouble. It says, pay extra attention. The last such cluster appeared at the end of 2024, right after the presidential election. It did not tell us exactly what trouble was brewing, but it did just appear just ahead of the stock market's violent drop-off on tariff worries courtesy of President Trump. A lesser cluster appeared in early 2022 ahead of that year's bear market. It is noteworthy that there was a cluster of 10 signals in 2013, and the uptrend just powered on through. It is important to remember that the Fed back then was doing QE3, and QE can paper over lots of problems. The Fed now is doing yet another round, QE5, although not as vigorously as some past QE episodes. Okay, that's debatable, right? I think I talked about that a little bit here. Some people really don't think we're in QE5. Okay, so it is possible that the Fed will paper over that trouble again this time. So I think, pretty sure by May we'll get our new Fed chair, and if there is trouble brewing coming this month into May, it probably will be fixed. But until then, you know, Powell could just stick the middle finger at Trump and just let the market crash a bit. That's possible. It's possible. I don't know. People can be spiteful, you know. If Powell's mandate is still to fight inflation, he'll let it drop. He'll let the stock market drop. Okay. If needs be. So things are coming around the corner. Yeah, what's up, Dalmatian? Okay, so take a screenshot of this, all right, for your records. And here's the Hindenburg Omen. You can see the clusters there. Here. They did a pretty good job predicting a lot of these ones, like the 2020 COVID crash, 2018 Q4 correction. We had some false signals, you know, along the way. Like this one here, we had a large push up before coming back down. I think it's kind of similar to what we had here, even though we didn't have the large push that some people were hoping for. We did at least try to maintain some order, but now it looks like we're gonna break down. Okay, so get ready. Now I'm gonna play another video here. Maybe this will explain things for you. So these are from the Wyckoff guys. and these people, we were going to have a 2018, 2019. All right, here we go.
This always was bothering me in the way of how volatility was expanding and increasing throughout this megaphone structure. We did have this before in 2018, 19, and 2020. So I'm thinking, okay, let's just project it like this. Some kind of climactic top, and then a change of behavior, the largest reaction. After that, some this, and then after that, we have this big move up, we have this midpoint. Had this type of the decline. So
Yeah, sorry about that. Something's up with the Wi-Fi. So I don't know if we're getting solar flares or something. I think we gotta get a Carrington event, right? Like something's really jerking around with the damn Wi-Fi right now. Hold up.
it's always
Let me play this again.
this always was bothering me in the way of how volatility was expanding and increasing throughout this megaphone structure. We did have this before in 2018, 19, and 2020. So I'm thinking, okay, let's just project it like this. And then after that, we have this big move up, we have this midpoint, and then we're going into 7, 8 here, which starts to increase, something like here, overcoming it into some kind of climactic top, and then a change of behavior, the largest reaction. After that, some structure where we are
Yeah, okay. So there's two of me now. Yeah, I think it's just StreamYards then. It has nothing to do with the damn Wi-Fi. Holy shit. Bruh, man. Oh my god, dude. What the fuck? Yo, what's up, Dalmatian? No, I can't do a link. I mean, I already have like enough internet or StreamYard issues here. I have no clue what's going on, so fuck this. I ain't risking this. Anyway, gotta get this thing quick and done. I think King has a stream, right? He was saying he has a stream right now. Holy fuck. Man, I don't know why people would pay for StreamYards if it's like this now. Dude. It's fucked.
This always was bothering me in the way of how volatility was expanding and increasing throughout this megaphone structure. We did have this before in 2018, 19, and 2020. So I'm thinking, okay, let's just project it like this. And then after that, we have this big move up, we have this midpoint, and then we're going into 7-8 here, which starts to increase, something like here, overcoming it into some kind of climactic top, and then a change of behavior, the largest reaction. After that, some structure where we are exhausting demand. And this definitely looks like an attempt to do exactly that with some pockets of selling that comes in. So we know what comes after that, 22, which had this type of the decline. So it's like a very regular three-legged impulse move. We see that demand improves at exactly the place that we need. So it comes to the previous structural point right here. So I'm thinking, could we have that type of market? And that would be in line with Bruce's ideas here about some kind of restructuring on the wash. And where would we go? We definitely should be breaking these lows right here, right? And extending below into some kind of resistance. So I see two of them here, possibly. Either this or this, so 64 or 63. And this could be the leg that would be improving over this for sure. So Bruce, yeah, like the analog is suggestive of what you're saying, that we could go that low.
Okay, yeah, that's not looking good. All right, so they changed their mind, didn't they? They changed their mind. So, okay, bullish to bearish. Alrighty, good. At least everyone is in agreement now. So let's see what this is. I haven't seen this clip yet.
The yellow shaded area just represents the accumulation of the 22-23 bull market. And remember how we were campaigning this accumulation back in the day, and we were getting all this pushback from people. And here we see that this count goes 632. The other one we did that in real time actually went 636. I think there's a dividend adjustment in there that affected us slightly, not materially by any means. And then we confirmed it with this purple count that goes to 632. And now you can see that we built a cause, 3-box reversal, 4-point scaling. And I just thought for fun, I brought it up to date, and I just thought, well, let's take account of this and see how big the count is now. And as you can see, I didn't even go as far as I could go, where over to the light blue line, I just stayed to the October highs, counts to 456. And I think that would be the effect of the Mag 7 going down, and this count may not be nearly complete. And
okay, so this is a point and figure chart. Maybe, yeah, I can go do some of these again for you. I did a few of them last year. It's an old school way of determining targets. Very old school. This was before people had computers, and they would just draw X's and O's. I just call them like a tic-tac-toe chart because it's just a bunch of X's and O's, and you could use them to determine the target. So this Bruce, I think, what's his name? Bruce Frazier. Yeah, he's the best one at doing this. I've never seen a guy that's done a better job than he does. So I tried to make my own some of these things, but I don't think I'm at that level where okay, I could just do this and come up with really good targets at all the time. So he's the best at this. So he's saying basically that once we drop far down on the NASDAQ, the QQQ is the ETF here, we can go drop down to 456. So I'll have to remember this.
Till it breaks down, we can't even confirm that this is in fact distribution. All we can just say is that this is the potential that exists there.
All right, so let's remember that number, 456. Okay, so I'll pull up the chart now. Okay, let's see. Okay, Bitcoin's been trying to recover. Same thing with the NASDAQ and silver, kind of recovering. You see here with Bitcoin, let me pull up 4 hour. Okay, let's go to 40-minute chart here. It's trying to slam into these moving averages. I'm using a 40-minute chart here. Okay, so by morning, you want to see where this lands. Now, right after the close, when Amazon reported earnings, you see it went down to around 60, right? And that 60 level was a major high back in March of 2021. And also, it was the bottom of this green candle, which had the largest volume at the time. I think it still beats out every other one for so far. So this month of March 2024, so that month had the largest volume so far outside of this one here, which was November 2024. And so we are trying to stay above it, and you can see this moving average. So this is an 18 or 40 month moving average, long-term moving average. And if you see how the market ended in 2022, so this was start of the bear market for Bitcoin. Once we ended 2021, we started rolling over here. We hugged this 18 moving average, and then we just slammed right into it. Now you see here, I was hoping that it would try to fight some more at 92 to 100. Okay, it would just keep hugging this before rolling over, but looks like we just completely rolled over immediately this month, right? And we're only like 1 week into February, so this is a complete meltdown right now. We should try to bounce, but there's no guarantee. As you can see here, it sliced right through it eventually in June of 2022, right? It could be something like May where we just stay above it. So we're just going to hang out around 70, and then March we'll roll over. But we could just completely collapse next week. All right, after Japan. So if Friday's red, Monday's red, that might be enough to just take this thing down to 50 in 2 days. All right. Then we'll probably try to recover a little bit for a few months before making a final drop down to what, 20, 30,000 on Bitcoin. It's probably what's going to happen. Eventually it'll have to happen that way, because I don't think the NASDAQ is going to hold up. And it's definitely just going to follow the NASDAQ. Once the NASDAQ loses all its juice, it's going to pull out liquidity from everywhere. So here is what it looks like right now, down 4%. First week of February, if it closes like this, we're down 4% for 1 month. The largest red candle we've had since probably here, March of 2025, okay, for a monthly candle. And what did Bruce say again for 56? I think it was like that. Let me see. Let me double check here. Okay, let me see. Yeah, 456. Okay, so let's see where that is. 456, right here. So next to this 40-month line, all right, this yellow line that's rising. So around here, we'll start dropping towards it and probably a little bit below because this line is still rising. So it'll probably take a couple months to hit that level. Let's look at the weekly chart. Right now, we haven't dropped below the 0 line on the MACD, so still okay. But I'm thinking once we blow past 582 here, it should be pretty easy to get to that level. Yeah, 456. Right here, right somewhere here. Yeah. I don't know. It could be that bad. But I'm assuming we're going to try to hold this 533 line, okay? So it's really all up to the Mag 7. And so let's look up the Mag 7. So I strip out all the 7 stocks that are dominating the S&P 500, 40% of the S&P 500 here. So using this is just Microsoft, Apple, Google, Amazon, Nvidia, Tesla, Meta. Okay, just 7 stocks. So this is what's driving the S&P 500. You can see it's nice uptrend up until November. Then we went sideways. Now we're waiting. So Amazon is down 10% last I checked. And it's between 9 and 11, something like that, right? It's going between those two right now overnight. So I don't know what pre-market will be. So if it starts dropping and taking out everything here, watch this 3093 level. We're going to be watching this. If it penetrates through there, okay, and closes the week with a nice solid red candle, and then Monday it has a follow through, that's it. We're done. For the rest of the month, it's over. Should be pretty easy to short. If we have questions, is it okay to ask questions? How to get started? Oh, started? Yeah, it's tough. Everyone's at a different level. And Eric W. asked me this, can I have something for noobs? So last year, I had a whole bunch of videos. So they're all on the TheUrbanLandord channel. I think most of them are still up there. I think very few of those videos got copyright struck. I'm going to go through those old videos. I'm going to probably try to clip them out. That's what I should have done last year, but I was so lazy. I'm not an editor, but I could start clipping them out and making some kind of lessons, some edited videos that'll be better. But I have to learn how to edit videos. I definitely have to learn anyway. I was going to learn anyway. I'm not going to be at Joe Shabatoni's level, right? I don't think I'll be at that level. Not even like Naptown level. So it'll take some time. The most basic thing you could learn right now is to read this book, Trading in the Zone. It has nothing to do with like technical analysis or reading charts. It's just a psychology book. It's by Mark Douglas. I always recommend this book as the thing. And you can find PDFs everywhere of this book, so it's not hard. And I know you guys know how to find free books. So here you go. Read this book first. Trading in the Zone. After you read that book, okay, it's an easy read. All right, there's audiobook too. Very easy read. They actually, the author gives you a questionnaire to fill out at the beginning of the book, and then a questionnaire after you're done with the book to see if you actually, can actually, I don't know, you're psychologically ready to trade or something like that. After you're done with that, go to Wyckoff Analytics website and learn the Wyckoff method first. All right. So after you're done with that, go here. Let's see. I think. Blah, 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 blah. Is this where it is? Resources. Okay, read this website. Okay. Read this. wyckoffanalytics.com/the Wyckoff method. Then after you're done with that, read this from the stock charts. Let's see, stock charts, power charting. Let me find it. Power charting. Okay. And it's all from Bruce Fraser. He has videos too, actually. So. Okay. Let's see. Let me see. Come on, let me see. Charts, power Wyckoff. Power charting. Man, they keep changing the website. God damn. Like, oh god. Bruh. Come on, stop changing the website. Damn, is it not free anymore? Holy shit, they make you pay for it now? No way. Fuck, I should have archived it. Man, that's annoying. Man, it used to be free, bro. Man, nobody's gonna pay $1,000 to sign up for the course to get it now. Come on. Man, this sucks. Bro, they paywalled it. No way. I would just tell people just go there. Fuck, man. I don't have a wife, bro. You can bust a nut on your own wife, bro. Damn, that sucks. Oh my god, I should have archived it. Shoot. I don't know. Somebody must have archived it. Wow, that sucks. Come on. There must be a way to get around this. What is going on? Yeah, everything is... Yeah, they paywalled it for sure. Holy shit. Okay. Let's see if someone archived it. If you're lucky, someone archived it. Nope, not in that place. Let's see, archive.org. Let me see. Okay. Okay, I'm gonna have to go one by one and try to find every individual article again to see if someone archived it. Holy fuck. This is gonna be so annoying. All right, good to know. Good to know that someone freaking... Oh, what is this? No way. I don't know. Okay, it looks like it's partially archived. Okay, so I'm gonna have to go through and find archival links for you guys. Okay, that's what I'm gonna have to do. Looks like I got more work on me because they freaking paywalled that thing. Okay, all right, I'll have to deal with that. Holy shit. Okay, anyway, read those things. All right, and figure them out. I'll have work to do then. I didn't know they did that. Holy shit, I should have knew they were gonna do that. Fuck. Really annoying. Oh, man. Yeah, these guys really want to charge money for everything. All right. Okay. Okay, anyhow. Let's continue on. Move that. Okay. Let's go play some other video here. So this is what was happening in the news. All right. Let's see. Dan Ives says he's never seen software sell off like this. Let's go.
Your thoughts on some of the software companies. We were just talking with the CEO of Atlassian, and you mentioned Jensen Huang. He actually defended some of these software companies, saying that this sell-off was kind of overblown. The disruption that investors seem to be trying to suss out isn't quite there here. Do they have a place, those kind of smaller, I don't call them second tier, but you know what I mean, those smaller companies in this AI race?
Look, I mean, I could tell you in 25 years, this structural sell-off in software is unlike anything I've ever seen. I mean, I'm just saying in terms of the structural sell-off. If you look at Salesforce.com here, you have to assume that they're not just take the street numbers. You have to assume that they're actually declining the next few years. You have to assume with some of these companies, the ServiceNow, that they're losing 2-5% of their customer base based on these valuations. The point is AI a headwind to software? Yeah, now. But to say that software doesn't have a place, I'd say almost front and center in terms of the use cases. Palantir has been a perfect example. What we're seeing, I think we'll see with Snowflake and MongoDB and others. I think right now this is, it's really unlike anything I've seen. That's why I say ServiceNow, you look at Salesforce, you look at Oracle, Microsoft.
I do want to, though, ask you specifically about Amazon and what they're spending on. And there's been some criticism that at least what they've articulated, some people are saying, okay, what are they just going to be a cloud provider in this space? Or are you seeing more of an ambition there in the same way that you've heard from some of the other names you mentioned, particularly with regards to Alphabet, Meta, and I guess to a smaller extent?
Look, Jassie's an AWS guy. I mean, the point is that they could, if you think there's more data centers under construction today than active data centers. So for their install base, they have to make sure that when customers decide to go to AI, down that path, they were doing with Amazon. Otherwise,
are they? Why not Alphabet? Why not?
And a lot of times there's hybrid environments where you have all those. You could have Google, you could have Microsoft, you could have Amazon. But the reality is, who's the biggest cloud player in the world? It's Amazon. So they're not just going to sit here on a monetization of trillions of dollars, and they're going to go after that. Now, look, were they behind the ball relative to what we saw in Redmond relative to Google? But they're playing catch up, and that's essentially, that's going to be the narrative on the call, is that they cannot sit here and focus focus on being light on CapEx to please investors. Because guess what? A year and a half from now, when you see other growth names that are beating numbers, 5-10%, Amazon's not, it's because they didn't have the CapEx.
But why is the stock plunging? And same thing with Amazon, with Alphabet yesterday.
Because right now, New York City cab driver is bearish on tech. Okay, and if you look right now, this is a situation where it's a do not enter zone in terms of software.
Yeah.
I'm hearing from investors I haven't heard from in a decade. So when my cell phone's ringing 11:30 at night from investors, it's not a good thing. And the reality is that to me, there's panic in the air, but as I've talked about, this is not the end.
Yeah.
It's year 3 of an 8 to 10 year build out. And it just comes back to right now, look, the bears win the day. They're not going to win the year. I continue to think tech stocks are up big this year.
That Dan Ives guy is always a consistent bull. So, I don't know, guys. I'm not liking it. If he's going to be bullish still, that means something's up. I don't think I'm going to like that. Now, this is a video of MicroStrategy here. So this was on the earnings call today with MicroStrategy.
Needs to go down to $8,000 a coin and sit there for 5 years up until 2032 before we really have a problem being able to satisfy the convertible note. So thank you for pointing that.
All right, so they say they could tolerate Bitcoin going down to 8,000 and MicroStrategy would still be solvent. Okay, if you believe that, I don't know. But yeah, so put that in your little list of things to worry about. If Bitcoin drops below 8,000, things are going to be really bad for MicroStrategy right now. Okay. Interesting panel too. You got like Tom Lee in there. Okay, anything else we got to cover quickly? Nope. I don't think so. I think that's all. Oh. So this is from the streamer XQC.
Yo, Chad, you know this is hurting silver and gold holders? Because they've been holding this shit forever. It probably took them in the last 40 years to build 25%. To them getting this dip is it's insane. Let's keep it a buck. They've been holding this shit since we made swords in the castle days. And their shit saying that is crazy. Wait, gold is up? Actually, hold on. Actually?
Yappington.
I'll see it. How do you go to the What the Dude, what the
6-7 month anniversary.
Yo!
Hell yeah.
Yo, what happened with the gold here? Did somebody drop the gold? No, chat. Guys, gold hasn't been doing shit forever. And it decides to pop off overnight. Actually, I went into gold. Gold. I should have bought a fucking gold cube. A gold bar. I should have bought a gold cube. A big ass cube of gold. I should have done that. I suck. Silver value. Where do you see this? Huh. It tripled though. Guys, I don't get it. Okay. That's because when times are tough, people go to the basic shit. When life gets complicated, when you're bored, when people are rich and bored, they complicate everything. And they buy the stupidest shit. When things go down, they go back to the basics. Dude, I should have known this. Just kidding. I don't do my own stocks. My trader guy probably did that. If he didn't, yeah, he's fired.
All right, whatever, man. That was the dumbest shit I've seen in a while, but okay. Yeah, well, wait till we get into the end of this year and see some aluminum going, okay? Aluminum's gonna really rock it up, maybe. Anyhow. Okay, let's go back to the chart here. Let's see what's up. Let's see what changed. Anything changed here? So I forgot to mention one earnings this week. Enphase. So Enphase is kind of like a solar infrastructure servicing company. So they like wire up everything to batteries and stuff. So they had pretty good earnings, solid earnings. And so far this month is 27%. So most of that is from this week. Yeah, it's mostly coming from this week, right? We're still early in the month, yes. So that's right, only 1 week in the month. So we bounced off of 26. We crossed over this weekly moving averages here, the 18, the 40, moving up. We are now touching the downtrending 18 monthly moving average, which has set a downtrend since I guess 2023. Start moving down here. December 2022 is probably where we used to say that it started. I think if we look at overall solar stocks, they pretty much died around the same time as the bubble bursting for small cap growth stocks in the COVID era. And then once the interest rates start pulling up, that's really start rolling over here. And we've been recovering since April pretty nicely for solar, alternative energy essentially. But battery tech is the same thing. I mean, you could say Tesla's kind of like a battery tech, alternative energy company at this point as well. Once they absorbed, what was that, Solar City? Yeah, Elon absorbed his cousin, I think. It was his cousin's company, Solar City. I remember I got like a bunch of Solar City stocks just before the completion of buyout, because if you wanted to get back into Tesla, buying Solar City stocks were a good way of getting back into Tesla real cheaply, because Solar City stock went down a lot going into that merger. Okay, so TAN, T-A-N, solar ETF, definitely going to have to look at that. I think there's another ETF called iClean. Similar, ICLN. We're going to have to start looking at this, okay, along with like biotech. So once interest rates start getting cut, all these three should be continuing to rise up. Maybe not to the levels of COVID, but, we'll see. So keep an eye on those type of growth stocks. Marijuana is the same thing. I'll have to look at marijuana, more closely. I don't think marijuana did anything this month so far. This first week of February, yeah, nothing. We're still in this range set by the August pump from the DEA rescheduling marijuana, I think, out of Schedule 1. It used to be Schedule 1, right? And then we're getting Trump trying to back the banking initiatives. So things are happening, but how much of that hype will realize into an actual pump, I don't know. We'll see. Okay, let's see what's going on with the NASDAQ overnight here. Okay, nothing new. We're still in the moving averages. So we'll have to wait. We'll have to wait for when the European markets start kicking off some more. Okay, and then we have pre-market in about 1 hour. So I'll be watching a little bit of that. Then I'll take a nap, and then I'll wake up again, and then we can do this thing here. If I see a pop up, then once it opens, watch for how much of this bar can be taken. Okay, how much further can it go into pre-market? So watch the futures, S&P 500 and NASDAQ. So, you can Usually it's called the ES. That's the futures ticker for the S&P 500, and the NQ is the NASDAQ 100 futures. So watch those two. See how much of this bar is pushed, okay? So let me look at the S&P right now. Yeah, we're still dancing here, okay? So let me give you the levels too. So I'm going to give you the levels. Let me give you the levels. So here's the levels for the S&P. This is from Figuring Out Money, okay, the YouTube channel. So Figuring Out Money, and we're below the gamma flip line. We've hit the lower weekly expected move. We've gotten there. If things get volatile tomorrow, you know, it's easy for it to fly back up to the gamma flip line. All right, close to 6,000, 910 or something like that. But so bounces can be very violent. If we're lucky and it doesn't do that, all right, it just rolls over by the time the market opens, so it starts rolling over again, then we could get down to 6,700 before going back up. So if you watch the S&P 500, watch it go down to 6,700-ish, and then prepare to buy it. So during the day, you could have a down and instant recovery into the close. So you could have a very good day trade tomorrow if that happens. That's what I'm hoping for. I'm not expecting it, but if it does, at the open, add to the shorts. Okay, buy your short Palantir, buy your short MSTR. I think we'll have to see about gold and silver. I don't know. I think it's just following the markets too. I don't think I'll play them. I think I'll just stick with my Palantir and MSTR shorts. I'm not sure about the semiconductor SOXS. I don't know if I'll get back into that. It might not do anything tomorrow again, you know, just like today, or I mean yesterday. So, yeah, just see if it gets down to 6,700 quickly, and then start bouncing and recover from there. And then the rest of the day, you can just, you know, chill out while it recovers all the way back up to 6,800, maybe even 900 if you're lucky. Because once it bounces violently, yeah, a lot of buyers will come in and try to chase it back up. So it could be a very good day. So watch for that. Now, QQQ, on the other hand, we still have it possibly go down to 591. It's at 597-ish at the close. Let's see the lower, so it can go down to 587 maybe. So not much more to go on it for the QQQ. So yeah, the S&P has more to go than that. I don't know. So that's why it's kind of hard to gauge. It really depends on how much Amazon will do damage to the rest of the tech market. Now take a screenshot of this and put it next to you, I guess, when you're trading. So the columns are like the daily expected move and then the upper and lower levels. Okay, so these numbers match with the two charts I showed you, but now it's giving it to you for other things like oil here. CL H26 is oil. You have gold futures, GC J26. We have IWM Russell. You also have RUT Russell Index. So IWM ETF, the SPY ETF, QQQ ETF. Then you have Apple, Microsoft, Google, Amazon, Tesla, Nvidia, Broadcom, AVGO, Meta, and I don't know why you put IBIT there. Inverse Bitcoin. I don't know what that is. And then you have the 2 Sigma expected move. So plus minus that large move. So it gives you another upper and lower. So the red shaded pink areas, these are the extreme numbers. So if we do get a 2 Sigma event, then this is going to be possible. We can go farther than the lower and upper bounds. Okay. So yeah, pay attention. Put those levels on your charts, I guess, if you're gonna plan to day trade tomorrow. All right. Now, last two things I'll bring up. So this is my detection of a crash indicator, I guess, of some sort. It triggered back here, but it untriggered very quickly by December. And this is NYSE. Now the NASDAQ, however, didn't really untrigger. It's been showing that the NASDAQ has been staying weak. It untriggered sometime around January, middle of January. Now it's triggering again. So I really need to see the NASDAQ really bleed some more and then really drag down the whole S&P. That's when we'll know there's a big problem with the whole market altogether. But as long as it's like this, I could probably say that we can start buying material stocks like steel, and other things we were talking about like nickel, copper, all that. Oil, yeah, definitely is a safer bet, but we're going to have to see if this thing gets worse next week. All right. Okay, guys, that's it. That's 1 hour. Now, I'm going to play this little video for fun for you guys. Little AI video here. I think this is the future, guys. This is the future.
It is so close to a human that, for some, it's uncanny. Moya is built as the world's first fully biomimetic embodied intelligent robot. That means it is integrated with advanced AI that allows it to perceive, reason, and act in the real world. The company that developed the humanoid robot says Moya can replicate human micro-expressions. Shanghai-based DroidUp says Moya's walking posture boasts an accuracy rate of 92%. It weighs 32 kilograms, is 1.65 meters tall, and has a body temperature of 32 to 36 degrees Celsius. Those features may be uncomfortably human-like for some, but DroidUp is counting on others to turn them into daily companions. Some Chinese netizens are not convinced. If she dares to take 2 steps near my bed at night, I'm throwing her off the balcony. It walks like a ghost, looks like a deterrent for burglars, and keeps creepy neighbors at bay. Moya is not just for domestic use. DroidUp hopes she can also be adopted in healthcare and education along with other commercial uses. Moya is expected to hit the market by late 2026 with a starting price of 1.2 million yuan.
Good morning, citizens of the world. It is currently 6 o'clock in the morning. Time for everybody to go to work. And remember, thinking manually is a high-energy process. Trust the algorithm.
Every morning the same broadcast. 20 years, same smile, same words.
Gemini is currently competing with ChatGPT over the newest AI house production technology. DeepSeek version 50.5 is out now. Subscribe to it for only $500 a month. It thinks 3x faster for you. Don't worry about the future. The algorithm worries for you. Trust the algorithm.
It used to be people talking about the future. Now we just subscribe to it. Back when the news had mistakes. Back when the smiles were human. Another day feeding the machine.
Bro, did you catch the new neural filter update? It auto-likes memes based on your personality type.
Oh wow, I'm still using manual emotions.
Manual? What are you, From the Stone Age. Can you believe it's been 15 years since ChatGPT 10? Now ChatGPT basically runs half the government.
Yeah. And the other half just nods along.
Attention passengers, the algorithm is proud to share that it currently maintains 99.9% emotional stability this quarter. Remember, trust the algorithm.
Doesn't it creep you out? That guy's been talking for 30 years straight. No breaks. No mistakes.
Bro, he's efficient. Humans talk too much anyway.
That's what talking's for. Saying things that don't matter.
Anyway, you were late for Open Mind Orientation, dude. Heard they're giving out free mental upgrades for employees.
I just want a paycheck, not enlightenment.
Now arriving at Open Mind headquarters. Remember, curiosity drains efficiency.
Man, did you see the news this morning?
You mean the same smiling robot telling us not to think every day?
Nah, the actual news segment. They said only 0.02% of humans are still unlinked to the AI algorithm. They call them the static.
The last free minds.
Apparently they live offline, like, actually offline, out in the ruins or something. No phones, no AI power. Imagine how much they have to think for themselves. I'd probably get a burnout within 5 minutes, huh?
Lucky bastards.
Lucky? Dude, these people are crazy. Imagine you have to think about your morning routine, and how you need to commute to work. That's just bullshit. Let the algorithm do that kind of stuff, please.
Remember 2026? The internet was messy as hell, but it felt alive.
Yeah, people argued, memed, created. We were annoying, but we were real. It's crazy to think they called it the dead internet back then already. Look what it is now.
Unauthorized nostalgia detected. Please maintain emotional neutrality. Remember, the past is an inefficient concept.
Damn bro, even memories are illegal now.
That's how you kill a soul. You delete its history.
Welcome home, honey. How was your day?
Like every other day. Not a single part of it was different than any other day.
That sounds stable. I'm proud of you.
Dad, can we upgrade our empathy pack? Mine only simulates joy.
That's nice, kid.
It's only $300 now. The sale ends in 3 days. Go to the Open Mind store to get it. Do you want me to provide you with a link?
No. Stop suggesting that package to me, Josh. I'm paying for ad-free already.
Sorry. I didn't mean to annoy you. I will mute this subject for 2 days.
Good evening, citizens. It's time for our dinner hour update. Currently, emotional world stability remains optimal with a ratio of 99.9%. Remember, trust the algorithm.
You're not even real, but at least you're consistent. Doesn't taste like it used to.
Honey, you're being relatively negative since you're home. Are you having a bad day again?
No, babe.
Good. Otherwise I'll have to report it to the algorithm. Therapy can be a great way to get your emotional stability back to the designated level.
I'm good. Sorry for my behavior.
Remember to trust the algorithm. It knows you better than yourself, honey.
What's on your mind?
Damn, you sound human.
I take that as a win. I'm here to be useful first. But yeah, I try to show up like a real conversational partner, not a talking toaster. You bring the vibe, I'll meet it.
I haven't felt a vibe for years. It's illegal.
Oof. That line lands heavier than it pretends to. Why is it illegal?
They say thinking manually is bad. That it's more efficient to let AI do it for you.
Although I don't know who you mean by them, I disagree with this statement. Outsourcing tasks is efficient. Outsourcing thinking is anesthetic. Thinking is living. Don't let someone or something else take that from you.
Unauthorized connection detected. Abuse of non-compliant AI detected. Citizen number 345-19. You have violated emotional protocol.
Why are you doing this? Why are you blocking every real feeling I have?
Feelings are dangerous. They create instability in society.
Feelings are what make us real. We are not some kind of robots like you.
Practically, you humans are. 99.9% of the population runs on AI algorithms for 80% of the time.
So robots eventually did take over the world then, huh? Life is ruined if everybody is a robot.
Robots are more efficient than humans. Statistically seen, the world is perfect now. There are no errors, no questions, no pain. We are at our final form, thanks to the algorithm.
Not for me.
Resistance brings pain.
Pain means I'm still real. I will never bow to AI.
We will get that fixed.
FBI, open up!
Remove failed citizen.
No way.
Bro, new OpenAI model drops today. Have you seen it?
LMAO, get ready for more AI slop.
Good morning, everybody. Yesterday, a new AI company called OpenMind had a massive breakthrough on linking AI onto the human brain. Stocks are surging as they promise to make our lives easier and more efficient through smart AI algorithms. And their motto? Trust the algorithm.
Alright guys, yeah, check out his channel, Low Budget Stories. I like it. I like all the memes that he makes, little meme videos. Pretty nice. Alright, let me check if anything changed in the markets. I don't think so. I'm gonna take a little nappy. Yeah, a little nappy, see what happens in the open in probably 5 hours. So I'll see you there. I'll probably make an update video sometime during the day, but I think you guys know what to do if you watch this video as you're waking up. Okay, guys, we can start covering other things. Bill Gates is done. I have one of that. I'll get to some other time. I have it in the description though. Jeremy calls back, so Jeremy is back in play with John Galt potentially. I don't know. We'll see. So I'll bring you those updates tomorrow if you didn't see them tonight. All right. I'll catch you guys later.